Don't get too comfortable because when this market turns around and we wake up, there's a bear standing right outside, ready to pounce, ready to devour. He might have walked away for a little bit. He might even be up in a tree staring down at us, waiting for his moment to pounce. Guys, the market's rally at up to this point makes sense because the market was largely in an oversold state, but there's a ton of weakness. Now, I'm going to break down some trades that I'm in. I'm in 3 trades I'm going to share with you guys today, and I'm going to talk about some statistical facts around the month of November and what's happened in the past when we've been down September and October, how that's impacted November. I'm going to give you guys my thoughts on all of it, as well as those trades. There's money-making opportunities here for us today. I reminded myself this morning when I was getting in and out of a Tesla trade, the analogy that I gave you guys yesterday, that Wall Street has trains running every 5 minutes to Cash City, to a payday, and sometimes you're waiting to get on. That's the trade. And this morning, I got onto a trade, a successful trade, got a little bit scared, stepped off the train. Next thing I know, it took off, heading to payday. And I thought, man, I was on that train. Why didn't I stay on it? Guys, you're going to get cold feet. It's hard to take these risk positions. And the market was choppy today, and so there's an argument to be made that if you don't have a lot of experience trading these kind of markets, that they were best to be left alone and wait for a better train that moves a little slower to come down the track to get you where you need to go. Guys, I'm going to share some of the trains I picked up today. I'm going to share some of the trades that I'm in. We're going to have a great show. This is the Stocks with Josh show. As always, so many of you guys smash that like the minute the video starts, and I appreciate that. I see that on my end. 100 likes come through right in the first minute, and I appreciate it. Thank you guys so much. Say hi, throw a heart in the comment, and let me know how this trade day was for you. Okay, let's just get into some facts about what's going on. We're going to start off with the S&P 500 heat map. We see that the morning started off green in anticipation of old Fed Powell talking. Like I've been telling you guys, Fed Powell is like the CEO of the S&P 500. Every time he comes out to talk, he's giving us forward guidance, and the market's either going to react good or bad to it. But if it's green in the morning, causes me concern that after the Fed speaks, or even after the market processes what the Fed says, it can easily turn red. I might have appreciated the markets from a bullish perspective a bit more if they had started off red. It might have given us the benefit of the doubt that we could possibly flip green based on something that Fed Powell said. I don't know how the day is going to be turning out because I'm filming this video. I've got some plays in action. I'll have to see when I'm done filming and get this posted where the markets end at the end of the day. Let's just start off with one of the big news stories that we got to kick this day off. It's a news story that the Fed needs to be keeping his eye on, and that's the JOLT report. Now, just so you understand what the JOLT report is, it's referencing job openings. So job openings were steady in September. And that's kind of good. There was a slight miss of expectation. There was the expectation that the job openings would come down, but they went up slightly. Largely, I think the market interpreted it as neutral, and potentially the Fed could become more dovish, believing that the rate hikes are working because the jobs market is not just going nuts and going straight up and climbing. That would have spooked the markets, but right now, the fact that it was largely unchanged or steady was bullish for the markets, and it made sense that the markets were rallying a little bit, especially because, like I said, we're still coming up off our lows. But I want to identify 4 statistics that I looked over in anticipation of the month that we have ahead of us. All of these are patterns for November, and I want you guys to hear them because they're interesting. The first one is that in the month of August and September, the big mutual fund houses do a ton of reorganization and tax loss harvesting before they go into the final quarter of the year. Now, you guys have probably heard this. It's why the markets were down so much, and that tends to lead to having a bullish November or December. That's typically something that the market expects. That's the first statistic. But then there's another statistic, and this one's not very bullish. This is when the markets had 3 consecutive bearish months. So it's 3 months where the market has gone down. Now, we went down August, September, and October. That's only happened 11 times since 2000. So in the last 23 years, it's happened 11 times. And every single time that we've had 3 consecutive bearish months down, then the fourth month has a 60% likelihood. The last 11 times in the last 23 years, it has a 60% likelihood of being down as well. But there is a 40% chance that it could be up. But I want you to understand that right now, there is a higher odds that November would be down if we go by that statistic. And then the third statistic I want to share with you is that largely the month of November, 9 Novembers out of the last 10 Novembers, the month of November was generally and is generally a bullish month. It's up on average 3.37%. And so 9 out of the last 10 Novembers, statistically, the average of it being up was just under 4%. And so, again, we've got some statistics that favor the markets being higher by the end of November, and we have some statistics that do not favor the markets being higher by the end of November. I've got one more for you to consider, and that is that typically the first 4 days of November are the strongest days in November. So if we put all of that together, the fact that we've been up November 1st makes some sense. And it could be that we're going to continue to see some buying over the next couple days. Now, at the end of this video, after I share some of my trades that I'm in with you guys, I'm going to give you guys my final thoughts and conclusions about exactly what I think the market's going to do over the next couple weeks, and I think you guys will find that interesting. Make sure you watch all the way till the end. Let me do a quick announcement, guys, for you. I want to share with you that I'm doing a meet and greet in LA with the Core 4, the Stock Squad. That's me, Keenan Grace, Stock Mo, Stock Up with Larry Jones, and we have a special guest, Chris Sane. Now, this meet and greet is a fundraiser, which means that there are tickets. Every single dollar that gets raised for this event is going to go to charity, and all of the expenses to host the event, which are being paid by Keenan Grace, those are coming directly out of his pocket as a donation. And so he is also matching the money that people are donating to this event, and it's all for a really good cause here in the month of December, and it's for children's cancer treatment. So guys, I want you to check out that link, but most importantly, I would love to see you in the LA meet and greet. So take a minute, make the plans to come out and meet us and to be together with like-minded people growing wealth. I think there's value in it. Hope to see you there. All right, let's talk about the trades that I'm in. Guys, AMD, I talked with you about it yesterday. I went into earnings with some calls, and initially it was kind of terrifying because there were some misses on their part, and AMD just hit the floor. It pulled back about 5%. Then they started giving the forward guidance, and they said, we've got some orders in that are going to be doing pretty well in the fourth quarter in a different sector of the business, and the stock fully recovered before the end of aftermarket trading, which was an amazing roller coaster. And then this morning, it just took off like a rocket with an absolute incredible move, giving us a really, really tall candle. And I'm going to break down the technicals for you because I wrote it up as best I could, taking profits along the way. But when we got to a strategic spot of resistance, I've loaded puts. Now, I'm going to be honest. I have loaded some puts, and I'm going to share with you guys why. Statistically, I believe that we're going to get a pullback on that. There's no guarantees. You can't follow me. This is what I'm doing. I'm sharing my trades with you guys so you can get into the mind of an experienced trader, and you can see my wins and my losses, and you guys can maybe grow and maybe make some money along the way with your own decisions. So let me share with you guys the technicals on what we're looking at now. Now, here's what I think is going to happen through my understanding of the charts and my understanding of candles. It's going to be a 50% retracement candle. You're like, Josh, what is the 50% retracement principle? I'm not sure I've heard of that. Well, here we go. Let's do a technical 101 class. The 50% principle is basically this rule of thumb that anticipates the size of a technical correction. Okay, so if a candle moves up really big, the 50% principle states that when the stock or other asset begins to fall after a period of rapid gains, which is what we got with AMD, it will lose at least 50% of its most recent gains. It will retrace. So basically what it's taking into account is basically momentum, exuberance. It got overbought on a time frame, and it needs to come back to a better moving average before going higher. And in addition to that, you guys often hear me talk about things back testing. So if we're going down, we will back test an up move before continuing down. If we're going up, we will back test it to the downside before climbing higher. Both of those are in play, and for both of those reasons, I got into puts on AMD, despite the fact that it was killing it today. We rode the calls up. We're going to ride the puts 50% down, and in that, there's tons of money to be made. I'm hoping to make 10K on this trade yet again. I'll share with you guys the outcome and let that be a reminder. You need to watch every video. Don't miss a single video, because what we're doing on this page is, for one, it's a ton of fun. We're making money, and I want to share that journey with you guys. Again, make sure you hit the subscribe and the YouTube all notification bell, because the outcome of this trade should be here within the next 24 hours, or for sure by the end of this week, and I will come back and let you know whether I made a big bag on it. All right, I'm going to make a very brief commentary on Tesla. Tesla was one of my fast-moving trades this morning, and here's the thing that I want you guys to understand. In the past, I've given you guys a line in the sand, and if we cross to the upside, I've said be in calls or buy to go long. You could also trade the shares or just invest in the shares. If we go to the downside, I've said get out, because there's more room to the downside. It's really what I consider a pivotal price point. And for Tesla, undoubtedly, that's the $200 mark. If you see us stay above $200 and we can manage to stay above $200 for a couple days, we will shoot up to 210 like that. But if you see us lose the $200 range and we can't hold it for a couple days, then you're going to see us come all the way back to 195 and 190 and 184, the ultimate destination. Now, I'm not predicting that. What I'm telling you is that you got to watch that $200 mark and trade that line, because that's going to be the line in the sand. If we're above it, we're going bullish. If we're below it, we're in bear territory, and it's just going to play out to the downside. Okay, guys, I'm going to briefly cover my last big position, which is Nvidia. Now, if you've followed me, you know that we're trading the negative impact of a broken down neckline of a head and shoulders pattern. And I've also in the past given you, so the neckline is 409, but I've also given you a line in the sand on Nvidia. I gave it to you over a month ago, and it's proven to be absolutely the right line in the sand, and that was 420. And right now we're testing the neckline, and it's very likely that we'll get a rejection candle on the weekly or the monthly time frame, and we'll come back underneath the neckline of 409. So we've gone down beneath it, we've come back up to test it, and we got to see if we get rejected beneath it to confirm the bigger move down to 384. But where did we go today? We came up and kissed that 420 mark again, and that's where I loaded up some puts to ride it down. If we are going to 384, those puts should be wildly profitable. Guys, I'm not suggesting what you do. And on that note, super quick comment. Guys, people are getting scammed. I'm never going to contact you, never going to sell you a class, never going to offer to invest your money. Someone contacted me on Facebook and said, Josh, I gave somebody $1,800 because they claimed to be you. Guys, it's not me. I will never ask you for money nor give you an opportunity like that. So please be careful. All right, final observations about where this market is going here in the month of November. Here's what I think is happening. In the big picture, we're pretty much sold off. The worst oversold conditions, I think, are behind us, but it doesn't mean that it's time to go up. We've got to build a proper base. We typically will go up, it'll fail, we'll come back, and we'll make a higher low. That's what I think is happening right now. I think we're in the process over the next couple days or week to make a higher low, which could then go on to leave us into bullish territory in the month of November. That's kind of what I'm trading, and it's kind of what I think is going to happen in the market. So I want you guys to be aware of that. Don't get too bearish. Don't think that the full crash is upon us and it's time to go short on everything. Just because you guys hear me, I'm in some puts and I'm expecting to make some profits. They're extremely strategic, and I'm going to turn right around and make long-term investments after I close out those puts, because I think this is a great buying opportunity for going long in some of our favorite big tech stocks. I think they're at their lows. So please be aware and don't get it mixed up or confused what I'm doing. I'm making long-term investments here over the next couple weeks, but currently I'm in some puts to the downside because I still think that we're going to be throttling into that lower gear. I still think the bear's in the woods watching us and is going to pounce if we're not careful. All right, guys, that wraps things up. The next big market event ahead of us is Apple's earnings, and I absolutely have a ton of thoughts. Apple's in an interesting critical place. I've got some charts which will tell you quite an amazing story about Apple and what to expect right around the corner. We know that their earnings are after market tomorrow, and I'm going to do a video tomorrow on Apple as well as some other things. So make sure you don't miss it. I appreciate you joining me today. Let me know in the comments if you guys are following me in any of these put trades. I'd love to hear about it. If you're afraid or if you're confident that they're going to make some money, let me know. Appreciate each and every one of you guys. Peace and blessings. Take care.